Hi, everybody. Tim Neal here from Logisense, and I am joined by Toby Bargar from Avalara, a senior tax strategist there, as part of part 3 of our 3-part series around the Wild West of IoT taxation, where we're taking a look at how the world of communications taxation may be becoming applicable in the world of IoT. In this part of this series, we're looking specifically around things like requirements around taxation reporting and what's all involved with that. So once you're dealing with regulatory taxation, how do we report? How do we track? What are our different obligations that we might have as a business? So we'll get started, Toby, and maybe you can give us a little bit of background around what's all involved around, taxation reporting.
Yeah, thank you, Tim. So as we touched on in the second session, one of the real challenges here is you've got multiple levels of government and different agencies. And so kind of starting at the top, the Federal Communications Commission in the US, if you do wind up with a service that's subject to FCC jurisdiction, you're likely going to need to file 499A and 499Q regulatory returns that identify the interstate and international revenues. And that's what they calculate the Federal Universal Service and some of the other FCC fees off of that you're likely going to need to recover. And that's not to put the fear of God into anybody, but one of the bigger, more obnoxious returns that there is out there in the world of regulatory compliance. It's a long form. There's 80 or 90 pages of instructions now attached to it, and they're going to want to know a lot of detail about your business. Moving down from there, you get to the state level, and usually with most communication services, there's kind of two different paths that you're going to at the state and local level. On the regulatory side, there's going to be a state public utility commission, public service commission. If you do wind up, being subject to state universal service or state TRS or any of those types of programs, you're going to have to file with them. And you may have other general regulatory requirements with them. Now, normally data and even private data types of streams of transmission are not typically going to be true regulated services in the sense that you're going to have to file tariffs and traditional communications company regulation, but you still might have to participate potentially in some of the other programs and file some paperwork, even though they wouldn't technically call you a fully regulated communications company. And then on the the true tax side, all 50 states have some sort of a tax and revenue agency, whether it be Department of Revenue or Revenue Cabinet or Board of Equalization, whatever the case may be, that collects the sales taxes and the communication service taxes and the excise taxes and things along those lines. And they're usually going to have a variety of different filing obligations that come in line with that. And then maybe you have some local filings too, depending upon what and where you're selling, as to whether or not you're dealing with any of the home rule states that have local sales tax filings, or whether you'd be selling anything else that might be subject to local taxes as well. And so sometimes you might be filing with a local city or county clerk or assessor's office as well. The other thing to kind of keep in mind with that is that your distribution and timing of all of that is going to kind of depend somewhat on you, the seller. A lot of people don't necessarily realize this, but sometimes there's different frequencies and filing requirements based upon basically, frankly, how much money you're paying the state, right? The bigger the check, the more frequently they're going to want it, is kind of the short answer with that. And so some places there may be some variability in that you may pay on a different schedule than other folks, but and some things do have a very fixed and regular schedule and everybody pays the same. But one thing to be aware of, that's an out there thing. As part of that process, you're going to need to make sure you're keeping a tax calendar, so to speak, that's got a tracking of what your filing cycles look like and when your remittance dates fall.
Cool. Now, you'd mentioned a couple of federal standard forms and things that you're going to need to fill in. What kind of standardization, if any, is there across kind of the state level and local levels, or is that kind of just everybody's got their own thing and you have to file differently for everyone?
Relatively little, right? So across states, to the extent that there's any standardization there, there is a program in a number of states that have participated in a streamlined sales tax project where they do wind up with some consolidated filing opportunities to file across a number of states. I'll tell you though, in practice, relatively few communications companies wind up participating in the streamlined filing, so it doesn't tend to be as ideal a circumstance for more enterprise-sized services and companies that are selling more complicated distributions of services. Within the state, sometimes you will have some standardization, right? So it's fairly common that, for example, county and local sales taxes will be remitted through a single return through the State Department of Revenue, right? So they'll have one return that's actually covering 3 tiers of sales tax and hundreds of jurisdictions potentially. So there is some standardization there. Cross-border, cross-state, less common that you'll have a standardization as well.
Right.
On the regulatory side, it's every man for themselves.
Yep. So, I mean, this sounds like there's a lot to consider, right? And some things that you want to have your house in order on your finance side of things. What are some of the things and services that Avalara provides to companies to assist them with this process?
Yeah, so Avalara is a tax automation company at its core, and so our primary service within the communications tax world is we have a tax calculation automation solution. So it plugs into billing platforms like LogicSense to analyze all of the information about the things that you're billing and charging. So down to the transactional level, what did you sell, where did you sell it, how much for, who did you sell it to, what taxes need to apply to that. We'll look at the facts, make the determination, compare it to our rate and tax database, make the calculation and pass LogicSense back the tax to collect from the end user, and then keep an aggregate log of all that data for ultimately filing with the tax jurisdictions. And then that kind of pivots into our second primary service that we fill, which is handling final compliance obligations with the tax and regulatory jurisdictions. So we can take all of that data at the end of the filing period, use it to complete all of the tax returns, handle all the payments and ledger handling with the tax authorities and holding your liabilities for future filing periods, and then ultimately reconciling that at the end of the tax cycle. So those are our 2 primary services that we handle.
Fantastic. Now, we talked a little bit in one of the prior sessions around, some challenges and some things that will face, different companies as far as, what taxes apply if you're a global company. But, what kind of challenges also face people around a reporting perspective, whether they've got legal entities in different, jurisdictions or things like that. What are some of those different challenges that people should be aware of there as well?
Yeah, well, this has been a dramatic change over the couple of decades that I've been in this space. It used to be relatively rare that we'd see North American-based communications companies selling things overseas, just because the barrier to entry to a lot of other countries was pretty high to sell networked communication services, for example. But as things have migrated to these IP-based technologies of most communication services, one of the real incredible blessings and curses of those products is the fact that most of them, you flip a switch and it's pretty easy to from a functional perspective be selling it globally, right? I developed a platform to sell a communication service online, and I flip a button, and why would I not want to take all comers from anywhere in the world that want to buy? The headache there, though, you have to kind of evaluate is that there are some big implications of selling services in other countries, not least of which being that you may need to register as a entity in that jurisdiction, and in order to be compliant with local laws, that will then oftentimes lead to you're then going to have to register there for tax purposes and start filing local taxes. And so it sounds really easy. Your developers are excited because they can hit this button and start selling things in 180 countries or whatever. And why not and whatnot? But obviously, you have to, kind of be prepared with maybe slowing the brakes a little bit on that and letting them know, hey, we need to evaluate a little bit of, firstly, are we even selling places that it's legal to sell? But then also, question marks about, are we going to need to register in these countries? Are we going to need to get, local representation? Obviously that can be very expensive if you need to start dealing with companies that can handle providing you with local representation in each jurisdiction, and then the filing obligations with it. The other main consideration you need to be aware of too with that from a systems perspective is the scary factor of currency. So if you are going to sell things globally into a global customer base, obviously from a sales perspective, you're going to have to factor for the fact that you're probably going to have payments in multiple currencies. This trickles down to the tax side as well, though, that you have to be prepared for the reality that once you have people paying their bills in multiple currencies, you're going to have probably calculated tax in multiple currencies. And so you're going to need to be able to make sure that you can identify in your tax data, what the base currency was of the transaction. And if there's portions of the billing that you're going to have to do a conversion before you file, then making sure that you're handling that cleanly and that you've established a clear and consistent process of what you're going to use for the data on your conversion and when you're going to be doing that in your billing cycle and everything else. Because just as it is with the payment side of things, you're going to have to turn around and pay that foreign jurisdiction their tax liability, and they're probably not going to want to take it in a mixture of currencies. So,
yeah, that's a fantastic point. I mean, it's the same, when people are starting to put their product catalog together in their billing side of things or their CRM, and well, it's just so much easier just to sell it all in US dollars. Well, that's great, right? Or in a single currency, but then it comes down, like you said, to tax calculations as well. So whether or not you actually want to offer your products in the matching currencies into the regions that you're selling it into, and the different tax implications that come along with that as well. So that's a fantastic point to hit on there. And with that kind of brings us to the end of our three-part series with Toby and all of the expertise that he's brought to this conversation from Avalara. A great amount of information across the series around things that you should be considering if you're an IoT provider, understanding what may be coming from a tax obligation from your side of things. If you have any questions for Toby or myself, please do contact and reach out to us via the email addresses that you see here on the screen. And with that, Toby, again, thank you so much for all your expertise and information that you've shared with us. And we thank all of you for joining us in this series.
Thank you, Tim.